Hello and welcome to your Washington, D.C. area real estate market report for February of 2026. I'm Edward Slavis with the Slavis Group of LPT Realty, and let us begin as always with interest rates. You may have seen the recent headline that interest rates are now below 6%. It depends upon which source you use. We always use bank rate every month for our report here, and we are still at 6.15 according to this metric. Now, our clients, many of them are seeing below 6. They'll see maybe 5 and 7/8. Of course, it always depends upon the individual borrower, their debt to income ratio, their income, etc. If you are curious as to what you qualify for, let us know. Happy to introduce you to one of our preferred lenders because our clients are, most of them seeing below this fixed rate, with many of them seeing now in the high 5s. And that makes a big difference, both in terms of the bottom line, also psychologically for the market. Once more and more buyers see a number that starts with 5, even if it's 5.99, doesn't matter. I think that will be very good fuel for the market. But we'd love to see these these numbers continue to tick down as we go into the spring market. Let's look at new listings here in the Washington, D.C. metro area. So this is not just D.C. proper, this is the whole metro area. And you can see high volume in 2021, a little bit less in 2022. Rates started increasing in March of 22, so right when the spring market was beginning. And we've had low inventory 23, 24, and in 25. So the big question is, what will it be in 2026? Closed sales follow a very, very similar shape here for the decreases down and then fairly flat for the last 3 years. Now, I showed this for the first time last month, but want to revisit it here. If you look at the number of homes listed, in 2021, 95,000, it drops down to 80, basically been flat at around 55,000, slightly higher in 25 than in 23 or 24, but not that much more. A big step down, about a 40% step down from 2021. Look at the homes sold. It follows the exact same shape. So 80,000 in 2021, down to around 48,000 a year for the last 3 years. It's interesting because the ratios are roughly the same. For every 100 homes listed in 2021, 83 homes sold. For every 100 homes listed in 2025, 86 sold. The worst year in terms of the listed to sold ratio is actually 2022. Perhaps some of the buyers were hesitant about putting an offer in. They weren't sure what was going to happen to the market. So maybe a lot of buyers held off. The best year, not by much, but the best year is 2024. It's interesting that the total number of volume is down about 40% for those newly listed homes, but the ratio of listed to sold has basically been about flat. So if you listed in 2025, you have just about the exact same percentage of that home selling statistically as in 2021. Now, what about prices? People are very, very surprised to see this chart. Again, this is all of the Washington, D.C. metro area, not just D.C. proper. And this is for all home types, row homes, condos, co-ops, detached homes, you name it. And you can see it climbs and falls. That's just kind of seasonal, but this is just a staircase up. The median sale price continues to increase throughout the metro area. If I break it down by home type, blue is the line you just saw. It's flatter now because the y-axis has changed, but the exact same line. Yellow are condos and co-ops. Purple are all attached properties, row homes and condos. The green line are row homes. The red line are detached homes. All of those are following a very similar shape where they keep climbing year after year after year. So the median home now, regardless of the home type, is selling for more now than it did in 2021 when rates were sub 3. That is very important for buyers and sellers to know. Price per square foot follows the same shape. It's slowly trending upwards. So it's not just that, perhaps the homes are getting bigger. No, the price per square foot is also, so the prices are staying the same because the homes are getting bigger. Not the case. The price per square foot is also going up. And months of supply overall look pretty good. Yes, they are higher, but I want to put this into perspective. A month of supply is a measurement of supply and demand. Simply put, if you have 10 homes on the market and 5 sell per month, you have 2 months of supply. The lower the number, the more it is a seller's market, the better it is for sellers. The higher the number, the better it is for buyers. Anything below 1 month is a red hot seller's market. Between 1 and 2 is a seller's market. Between 2 and 3, it starts to become more of a balanced market. Above 3 is balanced to buyer's market. For the first 4 years of this chart, more than 4 years, you had between 1 and 2 months of supply. If you look where it's the spring of 2022, you had about a half month supply. That means if no new homes are listed in the next 2 weeks, all the homes will be sold. That's how much demand there was. It is now peaking at about 2.5 months of supply. Condos, that yellow line, just over 3 months. But what does this mean? This means that overall, the DC metro area is still actually a seller's market. I'll break this down a little bit geographically in the meantime, in a moment. But in the meantime, this chart is very, very important because as an entire market, if you ask me, is it a buyer's or seller's market? It's a seller's market that kind of feels like a buyer's market. But if I had to, it varies. But overall, buyers are still buying at a very good, healthy rate. And again, the same percentage of homes are selling now as 5 years ago when rates were at record lows. Now, I want to break this out a little bit because what matters is the micro market. We will have clients call us and say, hey, I saw something on the news that said the housing market's really hurting right now. And the source was that prices have come down, 30, 40% in Tampa or in Austin or one of these markets that got very, very hot during COVID. And the answer is, who cares? That has no effect at all on your prices, whether they double or halve, doesn't matter. What matters is the local market. And I don't even mean just the DC Metro or the DC market. I want to talk about the market, the micro market for the type of property and the location. So for example, in AU Park for detached homes, most of the data points along this line are less than 1 month of supply, which means a red hot market. It peaked for exactly 1 month over the summer of 2024 at 3 months of supply. That is still a good market. We call it a balanced market, but still a very, very good market. Other than that, every single data point has been 2 months or less, most of them less than 1 month of supply. Red hot seller's market for detached homes in AU Park. And those homes, most of them, again, if priced and marketed correctly, will still sell with multiple offers in the first weekend. If you were looking at condos in Trinidad, however, and I keep using these two every single month and just kind of follow them through because we have clients with both of these properties. It starts off February 2021 at 3 months of supply. So the best month for Trinidad was the worst month for AU Park. And then it climbs up at one point to 20 months of supply. 20 months of supply would mean that if today, in February of 2026, if no new homes are listed, it would take until it would take until October of 2027 to sell off the inventory that is currently on the market. Now, it was 20 months for only 1 month, then the supply dropped. It's possible that the supply dropped not because buyers bought the properties. It's possible that the inventory was pulled from the market, the sellers withdrew their homes from the market, and that may also explain why we've seen a drop from 20 months of supply now down to 8. It doesn't necessarily mean the buyers increased the speed at which they buy. It could be that the sellers decided, let's pull it from the market. We have a client that just did this, pulled their condo from the market, and they're now renting it. So if you ask me how's the market in DC, I have to be honest and say which market. Even if you say how's the market in AU Park, I'm going to say, well, it depends. Detached homes or condos? How's the market in Trinidad? Depends. Row homes, condos, which market? That is very, very important. So what does all this mean? Rates are coming down slowly, They are coming down. We all want them to come down faster to, again, give more fuel to this market. The market is slower, but homes are still selling, again, that same percentage as they have been over the last years. That's pretty consistent. The micro market matters more than the market. If you are curious as to what the market is for your home, where you're looking to buy or looking to sell, let us know. Happy to share numbers with you and to run a report for you. We consider this a buyer's market. Everything is relative. There are some sub-markets, say AU Park, that are still very much a seller's market. But overall, we consider this a buyer's market in part because it is the best time to be a buyer that we've seen in easily the last 10 years, certainly in the last 5. There's more inventory, buyers have more leverage, fewer bidding wars, more opportunity to negotiate terms and not just strip all of your protections and try to make a competitive offer. Now, if you're looking to sell, you'll still get a market high price. The median sale is higher now than it has ever been. But it is very important that you prepare, price, and market your home. You can't take it for granted. And what we've seen for homes that are struggling to sell, a lot of times they're overpriced and or the proper preparation did not happen to bring it to market. If you are curious about buying or selling in the DC area, by all means, let us know. We would love to offer you a free consultation. If you're thinking about buying, selling, renting, renovating, refinancing, any residential real estate needs whatsoever in the DC area, please reach out. We would love to be a resource for you. Thank you very much for watching and take care.